Since when I started buying shares, there is a canon of the market that is not just in Kenya, but across, that markets can give liquidity, so that when I want to trade shares of KenGen, of Safaricom, there is somebody or a platform for me to trade with. But the market do not necessarily offer valuation. And I'll use Kenyan scenarios. Chairman, if, for example, you look at today, in the stock market today, because it's online, you realize that a company, for example, Kenya Power, trading at today's price, the market valuation of Kenya Power is around 30 billion shillings today, actually 29 billion shillings. This is a company with assets of over 400 billion shillings. A company making 24 billion in net profits. Chairman, I invite this committee to check if properly we are looking for the welfare of Kenyans. Could we sell Kenya Power even at double price of 60 billion? If somebody offered the government of Kenya today to buy Kenya Power for 60 billion shillings, double the current price, would the government sell? I think the answer is no. The same company, the valuation was 4 billion shillings, 15 months from today backwards. Nothing fundamentally has changed, but the valuation of Kenya Power has more than times 7. There's nothing that has fundamentally changed. This just to show the vagaries of the market when it comes to valuations. You can talk about KenGen. KenGen is making around 10 billion in net profit every year. The valuation as of today is 60 billion shillings. Their asset is 500 billion shillings. The valuation of KenGen is 60 billion shillings today, Chair. Can the government sell KenGen even at 100 billion today and say we are dealing with market price? If you compare KenGen with a peer, a similar company, let me pick one market, for example, Nigeria. If you check NGX, the Nigerian stock market, there are similar companies like KenGen. One is called Transcorp Power. There is another one called Geregu Power. Geregu Power actually had a transaction the last 2 weeks. They produce power half of KenGen, yet their valuation is 200 billion. This is one market called Nigeria, valuing half of KenGen at 200 billion. This is our market here in Kenya, valuing double of Transcorp for 60 billion. That is a total mismatch. And that is why when there is a big transaction, markets are usually never used. And I'll give you the final example, Chair, so that we just understand where I'm coming from. I gave this on TV the other day, but it's good I say it in record. In 2013, Chair, I had some few shares of a company called Rea Vipingo. And the company was trading at 27.5 shillings. And I'm still handling the issue of market price. 27.5 shillings. So some guys decided we are going to buy off Rea Vipingo. And they gave us an offer, just exactly like the one we have from our buyers. They gave us an offer of 40 shillings. That was a 45% upside. And me, as a small-time shareholder, I was thinking, this transaction is too good. We need to fasten. I cash in the 45%. But what did they do? One company called Centum petitioned the Capital Markets Authority, and they decided to open the bid for other people to bid. What was the consequence? One company came, that one called Centum. This one had bid 40 for a share of 27.5. That is how it was trading in the market, and that is the last price Rea Vipingo traded in the market. So one guy gave us 40. After the bid was opened, me, I was thinking, with my 10,000 shares, this is already too good a deal for me. Sent a petition, they offered a bid of 50. After 2 weeks, another company gave a bid of 55 shillings. I actually thought it was drama. Later on, the same company that was to buy it at 40, called Rare Trading, gave the final bid after negotiations with the other bidders of 70 shillings upfront cash, and they were to divest from land which they have. You know Rea Vipingo, the area around Vipingo, that's the land I'm talking about. These are not stories. They gave us a condition, after divesting from the land, we were to get an extra 15 bob. But because they wanted to exit very quickly, they actually told us, you not wait for the land to be divested. You guys, we are going to pay you 85 shillings now. A share of 27.5 shillings, Chair. And I pocketed myself 85 shillings and other Kenyans. That is the reason why when you give forth a competitive process, you get people competing for your asset. The language of a buyer is not the language of the market. When I want to buy something and I start talking about the market, that is the language of the buyer, not the seller. And that is why I see a problem is. On the same chair, this is public information. If you check when the directors of Vodafone, their group now, they are called Vodacom, called for a press conference, they were very, very upbeat about the transaction. In Kenya, the way we are asking for information, you realize here most of the information we actually got it from the buyers. Most of the information was volunteered by the buyers. So when they went back to SA and they called the press, one of the people there actually commended the directors for getting such a good deal. So we are here as Kenyans giving our asset for a song when the buyers on the other side, they are being treated like kings for getting a good deal and of course for taking advantage of our incompetence as a country. Chair, the second thing I have handled it already. I could have given many examples, including the recent one of Amson and Baburi. Before the information leaked in the market that Amson was to buy Baburi, and the price they ended up paying, it is upward of 175%. But they calculated when the information had already leaked. That's why they talk about a single digit, a double digit upside. But the real one before the market leaked, it was over 175%. Just to give many examples. Even banks in Kenya are undervalued. So what I'm trying to say here in this issue of the market, it will be a tragedy for Kenya to value this transaction based on the market. Because even private companies, take for example, banks. I want to give an example of a bank like KCB, where the government has a 19% stake. The current valuation of KCB is less than 230 billion shillings. It is around 0.7 to book value. Meaning, if you disband KCB today, the money you would get, it is trading in the market at 75% of the value. Would we go to the market and say we are selling this company at market price really? Even I will give the final example of a company that has no government attachment. Take a company like Diamond Trust Bank, a company which is a bank with 100 billion shillings in shareholders' funds or co-capital. If you buy the share today in the market, it is trading at 32% of that value. Would you go to Happy Bank to tell them to sell you the share in the market price? Would they agree? It has never happened in the market and elsewhere. Currently in the US, there is an ongoing bid of a company called Warner Brothers Discovery, the owner of CNN. But they are not selling in the market. There is a bid, and the final bid is two companies, one called Paramount and Netflix. Then, this jargon about the market, a sophisticated market like the US is seeing the value in competitive bidding in a private company. But here in Kenya, we have been cornered by our buyers, and we are now talking the language of market price. It will be wrong, and history will not judge us very well if you continue with this transaction with this kind of consideration. Second, I have already handled that process. Chair, 6 billion shares we are selling with our population. It means the government is selling my 100 shares as did Nyoro. If you divide the shares we are selling, Chair, and you give Kenyans their share, everyone in this hall, because we are all Kenyans, today will be allocated 100 shares. So we must look at it that way. So my 100 shares, what is the process that has been taken for the buyer to be identified? What was the process? How did you one day wake up and decide we are going to sell to the current buyer? I will highlight just a few because I know there will be questions. Let me go to the next one. There is something in the market for any transaction to work. for any information, for any transaction to work efficiently, Chair, there is something called information symmetry. Now, we are selling our stake of 15% to a company who is already inside Safaricom, who are already having board members. So definitely, they already have a step ahead of any other person who would think of buying our stake because of the information asymmetry. That is something else that we have to look at. Chair, allow me so that I go, this other point I think is the main one that brought me here. So before I go to that one, this issue of valuation, let me just recap a little bit in 1 minute. So, beyond the market, can we get the government of Kenya, when they conceptualized this issue of selling our stake, which valuation methods did they employ? Who did they hire to do the valuation? When did they hire those people? Because listening to the proceedings in the previous appearances, I heard about KCB and a framework contract. But Chairman, I would want to see that framework contract because I've been listening so that I don't waste your time. And
Mheshimiwa, I think, yes, Treasury did make that, and as a committee, we have requested